Okay, we're live, I think.
Yep.
Right, so welcome everybody. This is the episode 1 of this new podcast series. I'm Cassini Capital, and I've got my good old friend with me here, Amphipod Crypto. How are you doing?
Yeah, good mate. Good. How are you?
Yeah, all good. Funny to get teeth sunk into then.
Yeah. It's exciting. This Twitter project you got going on.
Yeah.
Is it's exciting, definitely. Playing the Twitter game and the YouTube.
Yeah.
Game.
Been a good couple of years in the markets and thought, it's probably good to, share some of these ideas instead of just keeping them all to myself. It's good to know.
Yeah, for sure.
It's been building up well.
Yeah. I mean, I've been finding those threads useful.
Yeah.
If you just want like a quick summary of what's going on, if it's XRP or quant or, macro or whatever, it's like a good digestible summary.
Yeah. Yeah, that's the thing, because I guess, as both of us, our main love is crypto, but, we understand how important the macro is and the legacy markets are. So, as much as we love crypto at the minute, it seems to be, mainly governed by all of the macro, as we're going to get into today. It'd be good to hear your thoughts on it as well. But I know, as you said before, that, you're surprised how well crypto is holding up.
It is pretty crazy, actually. I mean, it's just, the macro looks so bleak, but crypto hasn't. It's just basically gone sideways sideways and slightly up in some cases.
I think it's 160 odd days. It's just been in that bloody range, just going sideways, and
it does make you wonder whether there's just like some kind of level that's just so like well defended for Bitcoin, specifically for Bitcoin. It's maybe because if you look at the on-chain, like, I don't know if you've seen the Checkmate's recent video for the on-chain, but he was just saying that, well, basically it looks pretty good, the on-chain. Whales are starting to accumulate, and
I think that is the question. I mean, I've asked the people on Twitter the same thing as you say, that, we'll get into the nuts and bolts of the macro in a second, but, with the macro looking as bad as it does, is this the time where Bitcoin can decouple? I see, everyone's, that's a bit of a meme saying that, but, if it doesn't, my best guess would be if stocks fall off that cliff, if they lose that 200-week moving average, that was always my line in the sand. If they lose that, I can't see how crypto will hold it up. Especially if there's like a capitulation sort of liquidity event, everyone's going to you sell whatever you've got, and
exactly.
I guess Bitcoin would be no different.
And
this is the argument, is that you've got, if you look at all the previous cycles, it looks fantastic, doesn't it? We're right in the range on the RSI for Bitcoin, and loads of other, how the moving averages are and all those kind of metrics, but we've never been in a situation where the stocks lose that 200-week moving average. So what happens to Bitcoin and crypto if that happened?
I guess we lost it briefly, didn't we, in March 2020?
Fair.
Just like a big
capitulation. And
I guess Bitcoin did the same, like a similar thing, didn't
it?
I wasn't here at that time, but I think Bitcoin also put in a massive, it went right back, retested almost the bear market lows, didn't it?
That was it.
Something, around 4,000 or 5,000 something.
It pretty much went, there's about 4.5, 5, I think. So it nearly went down to the lows, which seemed like ridiculous at the time, because it was up around sort of 10k, I think, around that kind of region, and then it just shit the bed and just the floor fell out. And
well, in this environment, like, there's plenty of potential for a black swan like that. It's like, probably quite a lot's priced into the markets, but we just don't know what's going to happen next, really.
I think the key to that, though, the recovery was so quick. Just if you look at M2, we'll go over M2 in a sec, because I've got some good charts to show on that, and how that supports, well, all the markets, but particularly crypto.
Yeah.
And the money supply just was expanded so aggressively during that COVID time, and I think that definitely obviously aided the recovery.
Yeah, for sure.
The question is, if we get that event now, is that same thing going to happen?
It's hard to say, isn't it? I mean, I think judging by what the Fed's been saying, what Powell's been saying, doesn't really look like, pivot's coming anytime soon.
I don't see how they can, because I mean, they've got their dual mandate, which is price stability, which is obviously shot, and maximum employment. So unemployment is at like historically low levels.
Yeah, and it's gone down, isn't it?
It's crazily low. And when you look at how bad the price stability is, then obviously they're gonna, to save face as much as anything, they're gonna have to tighten, by shrinking the money supply and increasing rates until that price stability gets under control, whilst balancing the unemployment rising. So the unemployment's got so much more to rise.
So they've just got a free hand to keep tightening, basically, because
that's my view. Until unemployment rises strongly, then I think they've got a free license basically to crush the market.
Absolutely. They've talked such a tough game as well, like so hawkish that if they just kind of did a 180 now, just look like just such clowns. They'd never get done. Like I don't see how they could.
And I think because I think there's two reasons there: to save face, as well as the fact that they base their policy on lagging indicators. Both of those make you think that that's going to result in them over tightening. So I can't see them under tightening, because then they completely lose all credibility, and that they're using lagging indicators. So I think we could be in some pain potentially. Yeah.
Well, that's it. That's why I'm kind of so surprised that crypto's held up like it has.
I know.
I mean, this has been priced into stocks now. I think the market's definitely realizing that those kind of hopes of a pivot that we had over the summer are just being just don't exist really.
No,
I don't think. I mean, obviously at some point they're going to pivot, but I don't think we're there yet.
But this is the other key, is that when we talk about the pivot, I guess we're mainly talking about cutting or pausing rates, or even cutting rates.
Yeah.
But let me just show you this chart here that I've shared with my Twitter people. I call this one the sort of the master key. This is what I'm following at the minute. Is this chart here? So it looks a bit messy, but
I've seen it.
Yeah. So we've got the S&P, obviously in the background, and then the main things you want to look at here is the blue line, which is the federal funds rate, which obviously has been hiked loads this year. And then the other key is the orange line, which is unemployment. So this basically is representing the Fed's mandate graphically, whilst comparing it to the S&P. And my main concern is, if you look at the last big recession, so the .com and 08 here, the GFC, when the market was coming down, they were actually cutting rates.
Yeah.
So this is, as we call, the pivot, but the market didn't bottom till it was sort of like a year and a half after in both cases. And it was actually peak unemployment that signaled that the bottom was in. Same here where the yellow line's on. I guess the same in 2020. That was a bit more rapid. So this is the question here, is that if they keep raising rates, as we said, and unemployment's this low, until this starts to tick up, you would think that they're going to keep raising until inflation starts coming right back down. Yeah. Which is pretty terrifying, because that's different to how it always was before. Yeah. But I do think here, so everyone's looking at the rates, but I think it's actually that unemployment that's key. As we saw in March 2020, if we get something like this, like a rapid spike, to me, that's the signal that, the bottom's coming in. It certainly nailed the bottom in 2020, 08, and the .com. And the bottom actually comes in before the peak unemployment. Yeah.
I think there's a couple of interesting things about this, which is, Yeah, I was pretty struck by how as they're raising rates, so in like, you know, in the late 90s or in 2000s, 2006, 2007, how the market's still going up. Well, that was pretty interesting.
I think that's
now
just
we've got the opposite. You know, we're kind of selling off as the rates are going up.
I think that's just because we've been sold this sort of, you know, this narrative that, you know, oh, the pivot, when are they going to cut rates? And when they cut rates, the market's going to soar. But as you say, like historically, when it was a strong market, I guess really, you know, that's underpinned by the PMI, isn't it? You know, like Raoul Pal always goes on about the like the business cycle.
Yeah.
You know, if we've got that economic growth, I think I've got that here.
Yeah.
You know, if there's economic growth, then they can increase rates a little bit just to slow it down a little bit.
Yeah.
You know, whereas at the minute the problem is, the obviously growth is contracting heavily. Yeah, you know, and they're doing it the other way around. This is where they should be trying to cut rates to ease things up a bit, but obviously they're doing the opposite, which is, you know, which is pretty terrifying.
Yeah. Yeah, it's interesting.
But yeah, so I mean, I guess let's let me show you another article I wanted to show you. So this was, I retweeted a thread by someone on Twitter called Concorda the other day, who, if you don't follow him already, definitely give him a follow. And he did a really good thread talking about the dollar strength. And as we said, what could cause the Fed to sort of pivot or, you know, start easing rates or start printing more money or whatever. And I think the other thing to look at is how this dollar wrecking ball is affecting the weaker economies across the world. And let me show you this article. So this was the UN here, calling on the Fed and other central banks to halt interest rates or increases. And I've got a quote here from what they say. So they say, the UN estimated that a percentage point rise in the Fed's interest rate lowers economic output in the rich countries by 0.5% and economic output in poor countries by 0.8%, which, you know, so obviously these smaller countries are getting absolutely wrecked. You know, you see like Sri Lanka and you know, lots more of them, and there's rioting and God knows what. So, you know, I guess you've got the UN putting pressure on the Fed to try and say, well, you know, slow down, guys. And and as you said, Jerome Powell's not having any of it, is it?
No, he's got that poker face, you know. He's just, I don't know. I mean, it's impossible to know, isn't it? I mean, because like I can't remember who it was who made the point, but you know, they basically have to bring down inflation. They have to be extremely hawkish, because if the market doesn't believe them, then equities rally, and you got the wealth effect. People feel wealthier, people spend more, and therefore that increases inflation.
Well, I think this is kind of what happened in the summer, wasn't it? Powell threw out some dovish crumbs. You know, I sort of gobbled them up as well. There's a lot of people, and it was good. Obviously, there's some money to be made on that relief rally, but then they quickly came out after that and crushed any kind of doves that had sort of been born from his statement.
Yeah, exactly.
You know, and since that point, he's just literally just had his foot on the accelerator, hasn't he, and not let up.
I think it's more a case of like, you know, the boy who cried wolf.
Yeah.
I mean, I didn't think objectively that speech was dovish at all. But then I think because people were expecting in the past, you know, that they had pivoted every time recently in the past, that, you know, I think the market were just like expecting that pivot so much that they kind of like maybe read into something that wasn't quite there. That's my interpretation. I mean, I think, it's like when you expect something, it's kind of like confirmation bias, isn't it?
I think that
something to happen so much.
Jeff Snyder always talks about this, doesn't he? From Eurodollar University, I would say that's so important, like the psychology of what they're saying. Is almost more important than what they're actually saying. It's what the market believes.
Yeah, of course, yeah.
And then it's like a self-fulfilling prophecy almost.
Yeah, exactly. Yeah, so as a trader, that's a good trade. You know, getting in there. Unfortunately, that's where I sold like quite a lot. there's some, well, yeah, there's summer lows.
Yeah.
Kind of got out around 20K. But you know, yeah, I mean, we're pretty much back down to those levels now anyway. So,
well, I mean, we'll get on to whether we think it's going to go low. I mean, that could actually, you know, obviously, I think selling at 60K is better than 50K, is better than 30K. You know, obviously, sell as high up as you can, but you know, who knows? Maybe we do go down to 10K or 12K or 13K or something like that.
Yeah, I also just wanted to mention as well about the unemployment. Like, there's been hearing people say, you know, because there's generally less participation in the labor force, the labor markets, that's kind of like one explanation for why unemployment is still so low, is that people are just generally participating less in the labor market. So, you know, instead of if I don't have a job, instead of registering as unemployed, I'll go and like make an online business, or, you know, that kind of thing.
And what
quite an interesting point.
How do the stats reflect that phenomenon though?
Well, the fact that unemployment is still so low, you know, at historic lows, despite the kind of, you know, all the macro, you know, I've heard that as like one possible explanation for that, which is that just generally, I can't give you the exact details. It was a little while ago I heard this in an interview, but yeah, it's just like a bit of a shift where people are making money online these days. So
yeah,
you know, if I'm out of work, I don't need to necessarily register as unemployed. You know, so unemployment figures are therefore naturally lower.
Fair enough. I guess that could be something that skews the data maybe more now than it did back in 08 or something like that. Maybe even in COVID 2020, obviously, there's a massive rise of people working more online since then.
Well, that's it. Since that period, look how unemployment's just gone down. Like, absolutely.
I mean, interesting. If you look at the chart, though, it's sort of exactly the same level now as it was just before the COVID crisis.
Yeah.
And so I guess the angle I'm kind of looking at this at is that with rates tightening, liquidity decreasing in the markets, companies, obviously it's going to be harder for companies to get their hands on money because it's, you know, the rates are so high that they can't borrow as much, so they can't grow as fast, and therefore if they're not growing as fast, they're going to inevitably have to, especially if their earnings come down, which, you know, people are talking about, they're going to have to lay staff off.
Yeah.
And, you know, even if, like you say, people are still working online, I do think this unemployment will start to rise, you know, as that happens. Maybe it'll be softened slightly or whatever.
Yeah, exactly. Yeah.
It's definitely, well, I'd assume it would move off the lows.
There's just, I just remember hearing someone say, I can't remember who it was. It was someone pretty big, but I can't remember. But they were just saying that it just didn't really add up. Like, because the labor market looks so strong if you look at unemployment, but in fact, it's actually nowhere near as strong as, you know, there's something in the stats that just doesn't add up, and there's like a lot of people missing from the stats. But I don't know. I can't give you any more. I could try and find the interview at some point.
No, I guess it's a good point. Is that I guess really this chart's great, but I guess, you know, digging into the actual detail, the stats that make up the numbers is probably key. I haven't got that information here, so I can't really say, but that'd be something to maybe look into.
Yeah, well, it just could be another thing that the Fed's kind of going to miss from their indicators, where they're looking at unemployment, and in fact, you know, it's not going up as fast as it should be.
Yeah, so they're going to over tighten again.
Yeah, exactly.
That's another point to the over tighten camp.
Yeah, exactly.
You know, which inevitably, surely, I mean, you stack up that side of the argument, and surely those stocks are going to lose the floor when you think of it like, or maybe they get a relief rally from here, and then they really do roll over. I don't know. I don't see how the stocks can hold up if the tightening if liquidity continues to decrease and rates continue to rise. Surely some of those stocks are going to roll over.
Yeah. I mean,
again, it's not even just the stocks. I'll go on to hear this. I saw a great video the other day. This one, the Blockworks Macro. Again, I definitely follow these guys. They do some really good content, and they had this guy here, Joseph Wang, who used to work at the Fed. So he's kind of like, it's great having that perspective, a bit of an insider. and then the other chap, Harley Baseman, who's sort of like a veteran in the bond market. And they were basically saying that the bond market's already broken. Not just, I mean, we'll get onto the UK bond market, but the bloody, there's a VIX, like a bond market volatility indicator. Yeah. And it's basically at levels, the same kind of levels as it was in 08.
Yeah.
You know, and obviously the rates have gone, you know, through the roof, and 10-year yield and everything is just, you know, just charging higher.
Yeah.
You know, and just talking, and obviously all the bond markets are connected, like the UK bond market. I mean, good God. I mean, it was they had to step in, and the Bank of England had to step in to prop it up. And, you know, and since, you know, they've had to do that by effectively doing QE and printing more money whilst increasing rates, which is, you know, it's kind of one foot on the accelerator, one foot on the brake.
Yeah, yeah. And I think they've just announced that they're extending that as well. So, I mean, when I saw that on Twitter the other day, I thought, oh, holy shit. Like, I looked at the, you know, GBP USD, expecting some fireworks, and nothing happened, which I thought was interesting.
Well, let's just look at this. Let me just go on the weekly. Because, yeah, this is the big thing, is the blooming pound. I mean, obviously, it's those levels similar to 1985. There's that support, effectively.
Yeah.
Bit of a paper support, I guess. And then, yeah, we had that lovely bounce off it when it got wrecked, you know, when they stepped in.
Yeah.
But, yeah, you do wonder, I mean, if they're going to basically just, a bit like what the Japanese do, if they're just going to basically control the yield in the bond market by printing currency, they're basically sacrificing the currency to do that.
Yeah, exactly.
You know, so what the hell's going to happen to this? I mean, it makes you think this thing's going to, you know, it's going to melt down. I mean, what I was looking at, just from a technical point, was just to move back up to the sort of moving average cluster, which it kind of did, really. It's come back up to that 8-week, which it's hugged the whole downtrend.
Yeah.
So it did get the retest of the moving average, and then, you know, God knows where it's going now.
Yeah, I know.
But with those comments from the Bank of England, it's a little anonymous, isn't it? If you hold, you know, if you hold pounds and things.
Yeah, exactly.
I guess it's similar to the euros, and this is what Harley Baseman was saying, that, you know, they'll be next. You know, if it's the UK bond market, European bond market will be next, and, you know, eventually you know, the US bond market. And could that be something that makes the, you know, the Fed sort of step in effectively, you know, to increase liquidity? That's another thing that could get them to sort of turn around.
Yeah. It's it's hard to say, isn't it?
I think just while I'm on this video, the other really important thing that they mentioned was housing. And Harley Baseman used a great analogy. It said it's like, remember that cartoon character, the Wile E. Coyote, where he sort of runs off the cliff and then he holds in midair, and then a few seconds later, then he plummets. And he was basically saying, like, the housing market's sort of already dead, but he just doesn't know it yet, a bit like that analogy. Yeah. And again, he was using these, I've got a good sort of quote here that he said, he just used the maths, and he said, so before, a 30-year mortgage rate would be at, say, 3%, and you could borrow at 3%, you could borrow 450k at a monthly outgoing of $1,900 a month. Whereas now, with rates at 6.5%, you can only borrow 300k at, say, 1,900 per month. So that's like a delta of, you know, 30%. So he's basically saying, if you can only borrow, you know, 30% less, the house prices have effectively got to come down by a similar amount to try and equal it up. Yeah. And he's basically saying that that could actually indirectly cause the recession in the stocks, because if people are spending more of their income on the housing because the rates have gone up, then there's sort of less money to spend on other goods and services. So the other businesses then indirectly sort of crater as well through that mechanism. Yeah, for sure. Which I thought that was fascinating, both, you know, if you're in a house or, you know, just thinking about the stock market as well. But again, I guess it just adds to that thing of, you know, expecting sort of more pain possibly for stocks, you know, whether they bounce up first, you know, could well do. I guess that would be good, wouldn't it? I mean, if you wanted to destroy everyone's so bearish, get it to bounce now, you know, wreck out all the people shorting it, liquidate all of the shorts, and then send it down when everyone then thinks it's going to recover.
Yeah, that's normally how it works, isn't it?
Yeah, so I guess that's possibly to be expected as well.
Yeah, it's all pretty worrying, really.
How the bloody hell is this going to affect the Bitcoin and crypto then? Let's get into that a bit.
Well, again, I mean, it's hard to imagine that, if stocks plummet below the 200 week, it's pretty hard to imagine that crypto isn't going to follow. I mean, Bitcoin's held up, remarkably well, I think, considering. Having said that, it's had a huge sell-off this year.
Yeah.
I mean, look at that monthly candle there, like five months ago.
Yeah.
I mean, that's like the biggest one in history, I think, or one of.
Yeah.
And so you could argue that, people sold the crypto first, more so, and now this, like institutions, for example, I guess what institutions are in crypto, the big money, the smart money or whatever, maybe, did most of the selling of crypto initially, and now they're forced to sell stocks. Hence why crypto had a bigger sell-off initially, and now it's not really selling off so much. I guess that could be an argument, but yeah, I think what's even more surprising is how the altcoin market is holding up.
Yeah, I mean some of those.
Yeah, I mean, I really bought that kind of fear narrative, like in May, June, people coming out, especially Bitcoiners, saying like, yeah, altcoins can still they've gone down 80%, they could still go down 80%, can still get absolutely wrecked from here. And that was the kind of the point where I sold most of my altcoins into cash and Bitcoin, really. And yeah, since then they've held up as well / better than Bitcoin, really.
I know. I mean, there's been a few in particular, hasn't there? Like some like and I mean XRP even has woken up.
Yeah, but I mean, there's kind of fundamental reasons, I think, for that.
Yeah.
There's probably fundamental reasons for quant as well. I don't know what's going on with quant.
Yeah, I mean, I've broke this down a lot on my Twitter. Just get these moving averages up. So I mean, what I'm looking at is, for the bullish case, I guess, looks so similar to this 2019, 2020. So I guess this was still in the bear market. And it's a very similar setup.
Yeah.
To what we've got now. How you broke that, and then you're kind of looking at this, sort of zigzagging up. And again, let me go on to the daily because you can actually see it better here. Let's put these moving averages on. Get rid of that fib. So yeah, basically this is what I've been saying, that if you're a momentum trader, you're looking for this change in the EMA setup. So you've got the 50, which is above the 100-day, which is above the 200-day. And that structure should maintain all the way through. And that's essentially, in a bullish phase, what should happen. And if you look here, this has just started this formation back in, well, sort of mid to late September. So this is what I've been telling my followers. You've got, this bullish setup now with the EMAs has occurred. People are getting a bit carried away with just going straight up, I think. And I've been saying, even if you are bullish, at some point it's going to come back and test this 50-day. And if you're bullish, then that would probably be a time to add from a momentum point of view, as long as the EMAs keep the structure. But obviously on the flip side, there's a guy called Pip Snipers who I was chatting to on Twitter the other day, and he did a good video, and he's basically saying that possibly all we're doing here is just a macro A, B, C correction here to then shit the bed, basically.
Yeah. Which
would then be, and he did it using like a trend-based, fib. I think it was basically something like this, and saying it could get up to 170 or even up to here 220. And that would be then the A, B, C complete.
Yeah.
Which would then time possibly if the stock market shits the bed, and then we could get a big rollover.
Yeah.
It would sort of invalidate this fractal here, and it would invalidate the bullish EMA structure, and that would be the confirmation then. I mean, again, but then in the back of my mind, you've got stuff like Chainlink back in 2019, where all the cryptos have been absolutely murdered. And blooming Chainlink just went on its little merry march, didn't it? And
yeah, I mean, it's definitely possible. It's just hot. The macro is so different. I think that's the thing.
Yeah.
Like, it's not 2018, it's not 2019. You know, it's like radically different.
Absolutely.
It's hard to imagine. It depends. I mean, if we've bottomed, if, you know, stocks are just putting in a double bottom, or, you know, like just going to bounce off the 200 week, if Bitcoin's already bottomed, then I think this bullish case for quant is like very, very believable. Very believable. You know, I think something like quant almost certainly it's bottomed, you know, if that's the case. But like you say, if stocks and Bitcoin roll over, can quant really go to the moon from here?
I think you've got to say, logically, it's highly unlikely. I mean, like I say, Chainlink did it in 2019 against all the odds. Can quant do it? Obviously, anything's possible. But I mean, this is something I've said to all my followers, is that, you know, it's great that everything looks fantastic here, which it does. But if the macro worsens, which we're saying we probably will do, and then the stock market rolls over, then what are the chances of this rolling over too? I mean, maybe it doesn't have to make new lows, but I think we're certainly going to get a deep retracement.
Yeah.
But again, that should be seen as a gift, because if prices come down to here, anywhere down here, even low, I mean, good God, you know, you can
definitely one you want to add to your bags, isn't it?
Yeah, definitely.
I mean, I've never had any quant. I kind of missed the boat in the last bull run.
Yeah.
And don't have any at the moment, but
yeah, it's one of my best bags in the last one. I bought it about $10 around there somewhere, where it showed that clear break, and it just, you know, it was a good performer.
Yeah, I think that's gonna. I mean, I don't really know a lot about the fundamentals, but I know that it's kind of. I know the fundamentals are, you know, exceptional.
Yeah, linked with all the sort of CBDCs and you know, that kind of thing, and obviously the guy who runs it is, you know, is very well connected, and you know.
I need to look into fundamentals a bit more, but I think for the next bull run, that could be, you know, that could be a big one.
I mean, check this out as well, just from a BTC point of view. So when you do quant against BTC, I mean, look at, the only one that's better than this, I would say, is BNB, that I can think of off the top of my head, that's actually made all-time highs and is just ripping higher against BTC. And again, this is something I've been telling my followers, is you want to be taking note of any of these alts that are showing real strength against BTC, even if they come down a lot. You know, just I think it's a good sign for the next cycle, possibly.
Yeah, they've shown what they can do.
Yeah,
you know, it's like a taster of what's to come, kind of thing.
Yeah, and it's shown this, you know, they've obviously got a lot of strength against BTC, which I think is a good sign for the future. They've got good fundamentals, you know, they've got strong against Bitcoin, you know, they've moved well, so something to look out for the future. I think personally, you know, I'm still looking at that this master key chart here. When this unemployment does start spiking, you know, historically, that's basically saying the bottom, with the markets puking during that phase, absolutely puking. Everyone will be terrified. You know, there'll be blood on the streets. The news, you know, will be, you know, ultra bearish. If you think it's bad now, imagine that, you know. But that's really the time where you want to have cash. If that happens, which you think it might do, that, you know, that's the time where you can clear up in the stock market and the crypto market. And that, you know, especially if there's a liquidity event, prices can go low, way lower than you think they can. And, you know, that's really where you know, from a value perspective, where you can really make a lot of money. I guess there's this one as well, isn't there? XRP that's woken up.
Yeah, showing some impressive strength.
Again, it's still not cracked that 21-month EMA though.
Yeah.
You know, which seems to be a key level. You know, it sort of peaks its head up above and then gets whacked down. Did it in this cycle as well. and it's not got above. And I guess that at the minute it's forming a monthly doji, which is a reversal candle, which isn't. But as you say, then the fundamentals they're interesting, aren't they?
Absolutely. I think yeah. I imagine it's largely due to the lawsuit. What's happened, like the news about the lawsuit. I think it's going to be very interesting to see what happens when what the outcome is. I mean, it looks pretty good for Ripple. But how's that going to affect price? We saw the merge, like how everyone was so like hyped about the merge. Yeah, the merge. So yeah, we're just like, ETH was doing very well, and then I haven't heard of anything about the merge since then. Price has just gone down.
Yeah, it's a classic buy the news, sell the rumor thing, isn't it?
Yeah, exactly.
So I mean, that's the thing. Where could that happen for XRP? So everyone would bet their life on it. That if that case gets settled, the price is going to go to the moon.
Yeah, of course.
And so the game theory kind of says, well, if everyone thinks that, then surely then is that a chance to sell the thing off?
Absolutely.
Which would take everyone by surprise, I think, because they've been waiting for so long. It'd be so cruel, but that's how markets tend to work.
I think it'll depend a lot on what price does leading up to that moment. If we're rallying into the I don't know if you call it settlement. It's not necessarily settlement, into the kind of the verdict, the event.
Yeah.
The chances of selling off hard after that are obviously increased.
No, that's a good point.
Whereas if we're just kind of going sideways, not really doing anything into the event, then you definitely want to be buying, I think.
I mean, let's just show that ETH, as you said, because it's so funny, isn't it? I haven't heard a whisper about it. I mean, I've gone back and forth with a few people on Twitter. I think Crypto Caesar, we were talking about, and we had a similar idea that basically this zone here, I've had this zone for ages, but it's basically the golden ratio. If you do a fib from here to here of the last cycle, that's like the zone, the golden zone. And again, it failed the 21-week EMA here, got battered down. It's failed it twice here, as you said, with the merge. I guess the next support is the sort of, I guess it's right on the previous all-time highs. If it loses that, it's this low here, which is kind of around that lower high there. And you'd think, I mean, this seems like a magnet, this zone. Again, if we get all the meltdown in the legacy markets and possibly Bitcoin and the rest of them, again, if we can get down here 500 or 600 or whatever, 700, they're just like lovely buying zones, aren't they?
Yeah, absolutely.
But I mean, I guess it depends how you want to play it. I guess, there's sort of a value way of playing it, buying things when things are cheap, and there's a momentum way of playing it where there's bullish momentum and you miss out on some of the gains, but you wait until the momentum's confirmed with the moving averages and whatever.
Yeah, exactly.
I mean, how do you think about that? How do you think you're going to try and play it? Obviously not financial advice.
Definitely you don't want to take financial advice from me. Yeah, I'm only about just over a year old in crypto, really. Well, a year and a half maybe.
Yeah.
But no, for me, so basically I've got my pot of cash. I've got some limit orders set for Bitcoin mainly, going down from like here to 12K or something like that, 11K. I'm kind of bringing in some money, which I'm half DCA in that. So I'm just like nibbling little bits as I bring it into, at the moment, I'm just focusing on Bitcoin, just building up a bit more of a Bitcoin position.
Yeah.
But I do want to get into some alts, but ones like we said, quants. I mean, I've got a bag of XRP that'll, I'm just not going to touch that really. That's just like just hold that. But there are some alts that I'd like to get into, such as quant, ETH at some point, probably BNB. But for the most part, I'm just kind of waiting for that bigger drop. So aside from nibbling little bits at the moment, It's mainly just waiting for that bigger drop or confirmation that we're not going to have it. You know, so it's either we're going to have that big drop, in which case I'm going to start being a lot more aggressive. You know, if Bitcoin's down at like 14K or something, I'll definitely start being more aggressive.
I think it's a very interesting zone. That, I mean, 14K is that kind of high here, which,
yeah,
you know, and it's confluent with, if you do a little fib from where we are here, just like that, it's the 1.618 extension, right? Pretty much nails that 13.8, 14K region. And I guess the 2.272 pretty much nails the monthly close there, which, you know, so that's 11K. So they're kind of nice zones, aren't they?
Yeah, exactly. I think, yeah, I mean, I think that level's a big level. But I just think, yeah, for me, I'm just keeping that cash. Going all in now just feels or going like heavy now feels very risky.
I guess to counter that, it always does when you're trying to,
yeah.
If you're a value investor and you're trying to buy at the point of sort of maximum distance away from the previous high,
yeah,
it's always going to feel terrifying. And
exactly,
I think when you use previous cycles, if the macro was similar-ish, you know, and you use prior cycles, there's so many indicators. Like, just if you get the RSI up, I think I've got it here. That's just you know, just stuff like this. It just, you know, on a monthly, it's as oversold as it's ever been. It's, you know, a deep value zone. But then, you know, you look at it here. I mean, this structure when you were just here would be terrifying, and it looks very, very similar to here. How you've had the move up and it's, you know, sold off. It looks very similar to those candles, monthly candles there, doesn't it?
Yeah.
You know, but the question is, like you said, you know, things are so landscape so different. But then that's always a theme as well, isn't it? Is this time different is always a dangerous set of words.
It is, but I mean, I think it's clearly different. I think it's, you know, I think using that argument, you know, is, I don't know. Of course, it's different. You know, every cycle's different. I mean, it already looks different, the chart. I mean, you know, every cycle looks different. The last bull run was nothing like the 2017 bull run.
No.
You know, the bear market looks similar-ish, to be fair. It's like kind of grinding down, and then you've had that big red candle on the monthly. But yeah, I know what you're saying. It's like, you know, it's like Checkmate was saying on that video, if we look back in a year and this is the bottom, then we're going to look back and say, yeah, that was a textbook bottom. You know, in the way that it looks so similar structurally, on chain looks pretty similar. We're not kind of at extreme lows on everything. On chain wise, so there's definitely room to go lower, but there are a lot of similarities on chain.
Yeah, there are
one of those things. We've had so much opportunity to accumulate at like around 19K.
Yeah,
it's like if suddenly we're up at 30K in like a month's time and we've missed that move, it's like, and that was the bottom. You're going to feel, or I'm going to feel pretty stupid, really, because, you know, it does look good. To be fair, Bitcoin does look pretty.
I think you'd feel even more stupid if you then bought it at 30K, assuming it's then going to go higher.
Well, that's the problem.
Down to 10K.
That's the problem. Like, not only do you have to buy higher, which means you're going to get less returns in the long run, you also got higher risk. Of course. Downside. So it's like, you know, you get shafted on both fronts, really. It's like, what the hell do you do if we rally to 30K and it looks really good? What the hell do you do?
I think the way I try and attack it is having two separate accounts, really, which is one is a value account, so a value investing way of doing it, where you're going to sort of dollar cost average to an extent when it's in your kind of zones. So, and then the other account is a momentum based account. So with the value, obviously you've got to try and figure out where is good value. I mean, now, you know, on chain, the RSI, this, you know, I own some Bitcoin now for that reason. I'm not going all in. I've got way more cash, but I still own some because there is that possibility that it does, you know, so to play that probability, I've got some, but then at the same time, you know, let's look at the drawdown, it's only
Yeah, exactly.
What is it, 70-odd%? I mean, we know this one was about 85%.
Yeah.
You know, I think again that, I mean, Soloway said this, didn't he? Is it 85% is about, yeah, there you go. It's on that monthly close, bang on the button of that monthly close, which we said is a 2.272 extension from this move here. So there's loads of confluence around this kind of 11K to 14K zone. And then the guys who just use support resistance, like Trader Main, or, you know, those kind of guys, they're talking about this level as well, the monthly close here. You know, so I think anything between 10 and, you know, 20K really is a good value zone. I mean, essentially it's similar to sort of 6 to 3K here.
Yeah, absolutely. I think if you're buying all the way down, which I'm planning to do, you know, planning to buy all the way down to 12, 10K, whatever, you know, I think that's definitely the play. I mean, it could go lower, of course, it could go down to 5K or whatever, but even then, you know, in the long run, like you say, 10 to 20K is definitely value, whichever way you look at it.
Yeah.
You know, unless you think Bitcoin's, you know, going to die, which I think's pretty damn unlikely. I think, yeah, that's definitely the play.
I think definitely from a value perspective, and I think you then got to try and find a way of deciding then what is bullish momentum.
Yeah.
And like I said on Quant, I think Quant's a good example of that, is that I've still got it up. You know, so if you've got a strategy of moving averages, and you can pick ones that work for you, I kind of like on the daily, I like the 50, 100 and 200. And then on the weekly, I like the 8, the 21 and the 50. And they're fairly similar-ish when you plot them. But I mean, when you've got this kind of VMA setup, you can say, right, I'm just going to buy the pullback and add on the pullbacks. And if the structure's lost, which the structure was lost at that point there, you wait for a pullback to the moving average and sell it here. So I mean, for Quant, if you'd played that strategy, if you bought it here on the retest and you sold it when it was lost on the retest, which is there, you're looking at 50x. You know, and that again, that's not a value. You would have been obviously way better buying it down here, but from a momentum, you can still do really bloody well if you can be disciplined with the strategy. And I think if you play both in parallel, you're kind of covering a lot of bases.
Yeah.
And you're forcing yourself to keep a lot of cash as well, because you're going to have cash until your strategy is triggered, and then you can start popping your money in. You know, so you've always got cash, which I think, you know, lessons I've learned over the years, always having some cash. I mean, Willie Woo said, like, even in a bull market, he will never have less than 10% of his portfolio in cash, because you never know. You always want to have that cash at some, you know.
Yeah.
And as the price moves up, increase the cash position as you take profit.
Yeah, absolutely. That's a lesson I've learned as well. You know, I went all in 2021, and by all in, I mean, like, you know, taking out debt as well.
Yeah.
Not only did I have no cash, I had debt, so I was actually like negative in cash, really.
Yeah.
And then, you know, basically had to pay off that loan, or decided to pay off that loan near the June lows. You know, like the worst possible time. You know, it's like, yeah, definitely learned that lesson.
I think that's valuable. This is why, because I learned this lesson back in 2018. So, you know, I came in the 2017 cycle. You came in, like probably a lot of people listening, in the 2020 cycle, 2021 cycle.
Yeah. And
this is why I wanted to do the Twitter account, really, and why I wanted to do this podcast. And, you know, having you as a good person, because we've got this experience of, you know, I saw it all in 2017 and 2018 and made all my mistakes mainly then.
Yeah.
You know, and still I made some, you know, in this last cycle, and it's going to happen. And I think people who've just come in 2021, you know, they've got to be able to keep sort of mentally strong and think, even though I've made these mistakes, you know, it's all a learning curve. And as long as you can stick around and you can hoard some cash, there will always be another opportunity. Just don't give up.
That's it. Absolutely.
You know, down in the blooming guts. You know, I remember it well down in, so I got in sort of here sometime 2017. You know, and Hal didn't sell anything, made about 400%, and then lost 90%, and just held it all the way through. enduring this phase here was excruciating. Then the COVID came, and that was, it was awful. But after that, obviously things recovered, and it will happen again, no matter how bad this gets. In all likelihood, this will definitely recover, and we'll make new highs. Certainly, some of the alts will. Certainly the stock market probably will. But so I think it's just, if you're new to this space, you just got to try and learn as much as you can, control your emotions, and just hoard cash, and and try and build a strategy, waiting for the next cycle really to start.
Yeah, absolutely. Yeah.
Just on a bit of a tangent, let me show you this crazy chart I saw Benjamin Cohen post. So back to the S&P, but I mean, we could talk about crypto with this. Was talking about M2, the money supply.
Yeah, I saw it. Yeah.
How crazy is that?
I know.
So if you can't see, people watching, this is the SPX against the money supply. So it's basically saying that the all-time high was back in the actual .com in 2000, and it's not made if you account for the increased money supply, it's not actually made a high, which is crazy.
Yeah, that is mad. Yeah.
I think if you throw that over to crypto as well, you can see how important M2 is for crypto. I've got this chart from Raoul Powell's research service, GMI. So it's looking at the global money supply M2, and then the Bitcoin year-over-year change, and it's basically, just correlates perfectly. Basically showing that M2 is the lifeblood for sort of all markets, and when liquidity has been taken out of the system, don't expect Bitcoin or any other cryptos really to go up.
Yeah.
That's definitely
makes a lot of sense.
Yeah, it's definitely something to keep an eye on, as we were saying with if we go back to this chart here, adding on M2 as a thing to look at on top of this. Because at the minute, I got into a little argument on Twitter with somebody who was sort of debating me, saying that the M2's basically hardly decreased at all, which is right. It's not really decreased much. Let me see if I've got it. Yes, it's only just come down a little bit, which looks like nothing. Someone was trolling me on Twitter saying it's like a correction for ants, he said. But I was trying to say that, well, if you compare that as a year-over-year change compared to that, or that, it's like so bloody different from a percentage change perspective.
It's the rate of change of the rate of change.
Exactly. Well, you're the mathematician. You should have explained it to this ant man.
Yeah, it's the fact that it's the first time that it's actually really come down, right?
Yeah, for a bloody long time. I guess it's only. Even here it was still going.
It didn't go down. It just ticked up slowly.
Exactly.
So it's more about the gradient.
I guess it was there. So after the .com.
But even then, this is kind of bigger than that really now.
Yeah.
And I'm not sure they've even fully started the QT program, right?
Well, I guess they have, in the sense that M2's gone down, and I've got another chart. I don't know where it is. It's one of these which accounts for all of the central banks, not just the Fed. This one. So this one accounts for all of the central banks, and you can see, that's even more drastic. So that's the ECB, the Fed, Japanese, whoever else. So it's they've definitely sucked money out of the system. They're not sort of creating fresh money.
No, but I thought I saw somewhere that the starting QT properly, well, that's the plan anyway.
Well, I dread to think if it's not started properly now, I dread to think what it'd be like.
Yeah, I don't know. I could be wrong. I could be wrong. I was under the impression that they were raising interest rates, obviously, but the QT was mainly going to come later. Maybe look into that. Could be wrong.
I remember Gregory Mannarino talking about it, but that was months ago. That was that was a long time. I can't remember, many months ago. If you look here, I would say, well, since February, really, that's been contracting downwards, which, maybe we need to get someone you know, Joseph Wang on to clear it up for us. But
yeah,
you know, I would say that's a tightening effect to me, just a reduction in the money supply. And that M2 isn't just the money supply. I think it takes into account all the sort of different assets that the Fed have on the balance sheet. But yeah, maybe it'd be good to see what that references you're talking about.
Yeah. Yeah.
Either way.
Either way, you don't. Yeah, I mean, for me, I'm trying to keep up with the obviously it's like time's an issue, like working and stuff, but keeping up with the macro is important. But at the same time, you know, just have it. We're not going to figure out the macro. Do you know what I mean? We're not going to predict how this is all going to play out. I think just having a solid plan that's going to give you decent results, whatever happens, if you know what I mean. More of like a long-term, you know, DCA, buy into value, you know, and keep one eye on the macro as well. I think that's the way to play it.
Yeah, I think certainly if you're a newbie, and I mean, it's all very overwhelming if you're only new to the space or new to investing. There's so much to know and to learn, and you know, you're constantly, you know, learning more and more, you know, all the time. You know, even when you've been doing it for 10 years or whatever, 20 years, you're always learning. You know, it's just the nature of the beast, isn't it? It's a lifelong thing where you're constantly going to want to know more information, but trying to simplify it's probably a good idea if you're new to it.
Yeah, definitely. Definitely. Yeah, I think it's interesting now, like the point we're at now. You know, we're at kind of pretty much on historic highs, open interest in Bitcoin, as well as like really low volatility.
Yeah, I mean, there's definitely low vol, isn't there? I mean, you can see that with like the Bollinger Bands and stuff.
Yeah, volatility is lower than the bond market.
Yeah.
And lower than the currency market in Bitcoin.
Yeah.
And at the same time, open interest has just been going up and up and up recently.
Which suggests there's a move coming.
Oh yeah. There's a move coming. From what I can gather, there's a move coming. But then, you know, yeah.
I mean, you're so tightly bound.
Down, right?
You're so tightly bound, isn't it? And it has been for so long. I mean, it looks very reminiscent to this here. That would be obviously the bullish case, because this obviously at the bottom feels awful now. But you know, it feels awful now. It feels a lot worse if we lose that.
Yeah.
You know, and it probably just melts, you know, as it tends to do. When it was kind of like this point, wasn't it? It prattled around for a little bit, and then when it goes, and it just melts over 1 or 2 months. I guess really, if it does lose this level, then we're looking at this kind of zone, 11 to 14k, aren't we?
Yeah, I think that's the next major stop.
I guess here's something to point out as well, because I mean, I look a lot on I like using log charts, but I mean, I've seen people like Pentoshi and, you know.
Yeah, I've started using linear as well.
It's just a different perspective. I mean, if you look at that, well, basically it suggests that obviously it depends how you draw the trend line, but we're sort of breaking it. We're right on that point of break.
Yeah, but then if you draw another trend line from the June wick. So if you go back to June, see those wicks there, and then exactly, and then just catch the top of those other wicks. We're actually still kind of trading below there.
Yeah. So,
but obviously we've got big horizontal support, you know, at like 18, 19k. Feels like if you just look at the chart, it just feels like a great zone to buy, doesn't it?
Well, yeah, it's like
there's that potential of just a complete, just the floor just falling through, you know.
You know, I'm not trying to draw a pair of tits here. This is
double bottom.
Yeah, I mean, that's the bullish case, isn't it? And it's held up lovely, you know, really nice.
I think get through that trend line and then maybe we're talking.
Then we can talk,
Honestly, let's get through that first. That's probably the main reason I'm not buying now is that trend line.
It's interesting if we go back to Pentoshi. I mean, he's played this. He's an account to follow, and he played it perfectly. He sold up here somewhere near the top anyway, a lot better than most people. And he's just basically been in cash all the way down. And obviously, when it scrows here, you know, he was still very disciplined to keep out, and obviously he's been really well rewarded. And he's been pretty bang on. I definitely follow him if you don't follow him already, anyone. And it's interesting now he's actually started getting interest. I think he's deployed some funds down here for that reason we're talking about, for the double bottom, the trend line, you know, and it's obviously 75% reduction from the top. So
yeah, exactly.
It's even if he's wrong, it's a lot lower risk buying now than it was buying up here, like most people were.
Yeah, well, he can just buy back his original bags and still have a shitload of cash.
Exactly.
So, I mean, it's a no-brainer. If you've sold up there, then you've got a license to buy now.
That's it.
If you've sold in June though, or sold in May, then you know it's kind of a bit different, isn't it?
Sell in May and go away.
Yeah.
Sell in May and watch your funds go away. But yeah, no, it's I think I mean, listening to his commentary, I think he was feeling a little bullish when he bought here, but then he seems to be thinking, you'd obviously have to speak to him, but I think he's obviously well aware it can come lower down to these levels if, you know, if we get a nuke.
That's it. And we also got CPI this week.
Yeah, hit me with that.
CPI, isn't it?
Is that the core, or is that just the general one?
Well, they come out at the same time, I think.
Yeah. Okay.
So, yeah, I think the expectation is slightly higher again. Is it slightly higher? I think. What did we get last time? We got 8.1, I think, didn't we? I think we got 8.1 or 8.3. We expected 8.1. We got 8.3. I think.
So not core, just the general CPI.
Yeah, just the general.
I don't know if I've got the general. I think I've only got
Core
core.
was 6.1, I think.
Yeah, core. Sorry, where am I?
So, I think core was 6.1.
There you go. There's core. Let's get rid of these moving averages.
Yeah, core was expected 6.1 and we got 6.3, I think. Is that right?
I mean, bloody hell. I mean, yeah, isn't that discounting oil? Is that right? That's
core, yeah, no energy and food is core, no energy and no food.
That's it.
But I mean, obviously oil's been recovered nicely, hasn't it?
So, yeah, after being wrecked. So yeah. I guess, but then again, that lags, doesn't it? It does lag.
Yeah, exactly. Yeah. But still, I think, yeah, this inflation monster is, yeah, hard to say. It's going to be very interesting. I mean, that could be the catalyst for the next move, this big move that I'm talking about.
It's in like if CPI is higher again, it gives the license to the Fed to raise even more than the points we discussed earlier.
Yeah.
Which, you know, the market's going to puke possibly.
Yeah, I think the easy play is just look at the expected core or headline CPI, and then if it's above that, basically sell, and if it's below that, basically, you know, it's probably a pretty good little swing trade.
Yep.
You know, yeah.
It seems like every week at the minute, it's been like this whole year. It's like a big week all the time.
I know.
Big week, you know, big week.
These events coming thick and fast. I mean, I've literally been at work at times on my phone on the FTX app, literally like waiting up on Twitter for like the CPI to come out and then like, either selling or buying, like, you know, literally while I'm at work, just like under the table. It's like, you know, that's what it's like. It's like you just, yeah, just only like small amounts just for like little trades and stuff, but
yeah.
Yeah, I don't know. It's quite tense. I'm finding it quite. This whole thing's quite. It's like the calm before the storm, almost. You know.
I think so. I think, like you said, there's a lot to be said for big move coming either direction, and I wouldn't be surprised either way. I still think if we do go higher, we will probably then come lower just based on the macro and things that we discussed. But you know, I wouldn't also, like you just said there, if this CPI is higher, then that could maybe forget that, and it's just a pure nuke through support for both stocks and crypto, maybe.
That's it. I mean, when open interest is high, then, you know, a small move can cause a big move. You know, like a squeeze. I'm pretty sure the funding looks quite positive though. Although, is it just? I'm just going to check that actually. Do you use Coinalyze?
I've used it before. I saw Dylan Leclerc doing a little hit piece on it. He reckons a lot of that data is kind of fraudulent or fudged a bit, you know.
I would take it with a pinch of salt, definitely. I wouldn't like bet your farm on it, but still good to have a look at.
Yeah, sure.
Yeah, it looks quite. I mean, open interest has been quite high recently. Funding rates been positive recently, according to this, and then it's just kind of ticked slightly negative. So, I guess we've had a bit of a rally, haven't we? Well, I say rally, by a couple of $100, but.
Do you want to share your screen so we can see that?
Yeah, sure.
I'll just stop the share on my.
You see that?
Yeah, I got it.
Yeah, so so you can have like different exchanges. Yeah, I'm not sure how you. Oops. Can't remember how you get the different exchanges. Yeah, I generally just use FTX and then indicators. So aggregated. There are different ones. I'm never quite sure which to use, but I've seen people use the stablecoin margin contracts.
Yeah,
I think makes sense.
Yeah, of course, yeah. That's what most people are trading against, I guess.
Yeah, exactly. There's also these ones like CVD spot and FUTs and all that. I don't really understand that. Not really. I haven't really looked into that properly, but I just use this one. So this gives you basically, I mean, look at the open interest here. Maybe just put this on the 4 hourly. Yeah. So according to this, the open interest is as high as it's been for a long time.
Yeah.
Apparently it is higher. That open interest now, this was Checkmate saying this in that video, open interest is higher than it was when we got to 69K last year. Open interest is higher now than it was then.
Crazy.
Look at that open interest.
Yeah.
Which, that's what I'm saying. And look at the volatility. It's basically since, well,
it's flat as a witch's tip.
Yeah, exactly. Look at that. So, it's like, what do you do?
I think you brace for impact either way. I guess you've got to make your play, haven't you? If you're long, your stop loss, could get run, but it's one way protecting you. But again, it depends how you're playing it, doesn't it? I mean, if you're going back to how I try and play it, which is from a value perspective, well, you would have already bought these levels anyway. And then you put cash on the side ready to buy more if it goes lower.
But you're still only buying, if you see 20 to 10K as your value zone, you're still only buying small amounts at 19K.
Yeah, exactly. You just buy
your value pot is still mainly cash.
Yeah, exactly.
Therefore, if we, that's kind of like only a small consolation if we rally hard from here, let's say. Okay, I mean, you might have nibbled at 19K, but that's not, you're going to kind of wish that you'd gone heavier, obviously.
You have, but that's an emotion, and you've got to try and get rid of the emotion and just look at what your strategy is. And emotionally, you're going to feel like that, but you've got to look at, what your strategy is. And the way I would look at that is, well, fair enough, I've got a little bit in my value zone. That's fine. What's the momentum zone? And if that bullish momentum returns, and you've got a way of measuring that, like I said, I use moving averages as one metric of doing that. When they come into your formation, then you buy from a momentum point of view, because you might have lost out in the value zone. Like I showed with quants, you didn't buy the bottom. If you just bought the momentum and bought when the formation of the MAs were formed bullish, and then you sold when they turned bearish, you would have made 50x. I mean, that's pretty good. So you could have made maybe 100x or 150x if you'd bought everything at the bottom, but no one's going to do that, really, it's a bit of a dangerous game. Like Coins Kid always says, if you try and pick bottoms, you get smelly fingers.
Yeah, exactly.
So it's.
Yeah, I agree with that.
But I know what you're saying. You have to. It's a good point that you've got to be able to control your emotions either way, and I think that's where the noobs get fucked. Is where if they're letting the emotions control them, then you're going to do silly things, like you're not going to buy the lower price and you're going to chase it as it goes higher.
Yeah.
You know, you've got no system to measure things. You've got no way of seeing if there's momentum or not, and you just kind of let your emotions run the show. And that's essentially what the market makers want. They want people to do that, to rinse them both ways.
Yeah, exactly. Yeah.
You know, and you lose out. And I think that's such an important point for people listening, you know, beginners especially, that
you got to rein in that FOMO.
Yeah.
You got to rein it in. Like sometimes you just, you know, you see the price ticking up, you see people getting really bullish on Twitter, you know, people who were bearish like you know, a couple of weeks ago, and suddenly, like, you know, sentiment can turn quite quickly. And yeah, I mean, I had it recently, actually. I don't know, quite recently it got a little bit bullish, didn't it?
Yeah.
It's like, but then I noticed I put out a tweet, we were right below that support, and also like open interest was high, funding was positive. And it was just like, actually, if you just look at it like that, it's not a good time to buy. It's like,
yeah,
you want to get through that level first before
that's it.
You're gonna FOMO in. But I don't know, it's just like it's the hardest thing for me, I think.
I think it is for everybody, because we're all human beings and we're all driven by emotion, aren't we?
Exactly.
I see it all the time on Twitter. All the newbie kind of people, or beginners, are just, they get so, I mean, in the quant at the minute, the quant price, they're getting so excited, and fair enough, you're making money, but you know, they're saying, oh, should I buy now? And it's like, well, it's just gone up loads, like 15% on the day. It's like, you can, but I mean, you know what I mean? The risk reward is skewed, you know?
Yeah, exactly.
I think the best way to do it is to just try and have a system that you stick to.
Yeah.
You know, everyone's got a different system, and that's fine, but find a system that works and stick to your system and your plan. And that way it removes the emotion. And you know, you're definitely progressing, I think, when you start getting FOMO, when the price starts moving down.
Yeah.
Because then you've almost rewired your emotional circuitry in your brain, which that's kind of what you need, really.
Well, yeah, exactly. That's it. I mean, I've got it now a bit, you know, so I've got it now, seeing the price just like chilling at 19K. So like this, you know, this could be an incredible level to, you know, to get in.
Could well be. You know, if we break that trend line, as we said, and all of that, it could be.
I think that's it. I think wait for confirmation.
Yeah.
I think, you know, it's like, yeah, break the trend line, you know, get the cross on your EMAs, whatever it is that you're looking for. And then, you know, be willing to flip your bias. That's
it. You got to be willing. And this is the thing I've had. I mean, some of my brothers, sometimes when we've been chatting and we got into arguments, so they were arguing with me, saying I was flip-flopping, and I was saying that ultimately it's a game where you've got to have strong beliefs, but they're loosely held. So it comes across as being flip-floppy, but when the data changes, you've got to be able to change.
Yeah.
You know, if you get stuck in your ways, then, you know, and I got into this in my first rodeo back in 2017. You know, you get stuck in your ways, and that's when you ride something all the way down to the bottom.
Yeah.
You know, and you lose 95%, which, you know, I know a lot. The Pentoshi did the same thing, I think. Maybe there's a cycle before, I think, or one of the, a lot. It happens to everyone. Like, most people are getting to do something like that, but that's when you learn, and that's the key. You just got to learn from those mistakes, and then build a system to try and attack it next time around.
That's it.
You know, so yeah, it's pretty interesting, isn't it? As usual.
Yeah, it's all consuming.
So maybe next time we speak, maybe this blooming range at the bottom, 19K, 20K range, maybe it's been broken either way, to the upside or the downside.
I think the odds are pretty high that it has.
As you said, with that CPI, that seems like a big one, doesn't it?
Yes, but then I don't know. I mean, we've had how many CPI prints since we've been in this range?
Yeah, true.
Of course, you know, little rallies, but
when's the next FOMC?
November 3rd, I think, or 2nd or 3rd.
Okay.
So we got October off.
Under a month.
Yeah. So yeah, obviously that'll have some kind of an impact. I don't know. It's hard to know, like, what will be if we do break down, or if we do kind of reverse medium term, short medium term kind of another, I'd say a proper bear market rally for Bitcoin. I'm not really counting that the one we've had as a rally, really.
I mean, it was weird because it was so muted. It didn't even get, there's those CME gaps at 28k and 34k, and I thought it's definitely going to try and close one of those or come up to the 21-week moving average like ETH did. I mean, all the alts seem to have had a proper bear market rally, whereas Bitcoin was very sort of, it was lackluster, wasn't it? Really?
Yeah, it just looked corrective, really.
Yeah,
it looked like it was just poised to break down, and like it should have already. We should have already broken down.
Yeah,
but then it's kind of formed this kind of double bottom kind of formation. Don't forget, we're still in like a descending triangle. We're still not out of the woods. I mean, we could be just about to break down now.
Yeah,
but the longer it doesn't break down, the more confidence you get, I guess, that it's going to hold. Yeah,
I mean, do you follow JT?
I do, yeah.
Yeah, he's a VP of some kind of fund. I can't remember exactly which type of fund, but he's got some useful insights. And that's the point he's kept making. Like he said, it's interesting how the bears have had so much time to try and smash those sort of 17, 18k that floor, and they've had 160 days and they've still not managed to smash the floor.
Yeah.
I mean, it's definitely a point for the bulls. It doesn't mean to say it's bullish, but it's certainly a point to the bulls that it's the bulls have managed to keep that floor intact for now. Well, as I go back to the start, as we said at the very start of the conversation, all of those macro headwinds are just increasingly getting worse.
Yeah.
And you'd have to think until that unemployment really does start spiking, or say the bond market completely implode. Let's say the US have to do what the Bank of England are doing.
Yeah, exactly. Yeah.
That would then be a signal almost, because then M2 would have to increase, and you know what I mean?
Yeah, exactly.
And we know that's linked to the price of BTC and all the rest of them. So I think really that's the main thing I'm looking at, is those kind of really big picture signals. When they start, if unemployment spikes or if the Fed have to step in and stabilize the bond market like the Bank of England are, I think that could be a massive signal.
Yeah, absolutely.
That also kind of infers that until then, yes, we might get bear market rallies, but there could be a lot more pain ahead.
Yeah.
Until those macro signals, are there. And
yeah,
that's my base case, but obviously that could be wrong, and I could change if things change. But for now, I think that's what I've got to go with.
Yeah, exactly. I mean, you've almost got to take it day by day, haven't you? I mean, what are stocks doing? What's the dollar doing? What's the Fed doing? What's inflation doing? These things change like from week to week, month to month. And you can only really you can only really think at the moment a week or a month ahead, really.
Yeah.
You can have your long-term kind of thesis, but like I was saying earlier, it's way too complicated to be able to say, I think that this is going to happen over the next 2 years. It's like, again, you can have an idea, you can have some probabilities, but
you can't be sat in anything in this game.
No, you can't be sat in it. You can think this is, it looks like maybe we're going to have something similar to 2000, or something similar to 2008, or I think the Fed's going to pivot. So the pivot then, the pivot's going to fit. The Fed's going to pivot, like sooner than everyone expects, or you can have your theories, but at the end of the day, things are happening fast. I mean, who expected all this stuff with the BOE recently? It's like it just came out of nowhere.
What a shit show that is.
I know. I mean, you just don't expect it, do you? From from the UK.
I don't know. I guess increasingly, the more you kind of take the red pill in all aspects of life, finance, or anything else, you kind of think of what happened during COVID. I can't. In some ways, I do expect total incompetence. I think.
Yeah, it's just
I know what you mean.
Like specifically, if it was more of a you know, an emerging
smaller nation,
then you'd be like, yeah, okay, that's kind of expected. But
I think that's a good point though, because what it does show is that it's kind of like the contagion. You'd expect, like in anything in life, the weakest get killed first, and then it's then the next then get taken out. And fair enough, we're not like Sri Lanka or somewhere like that, but you know, that sort of devil's knocking on the UK's door. Next door to be knocked on will be the ECB.
Yeah.
And then ultimately it's the Fed's door.
Well, I mean, UK and Europe have kept rates lower than the Fed, haven't they? Than the US.
Yeah.
And they've been like, you know, because the Fed start raising rates in like 2015 or something, and I think the other countries just carried on with like zero rates basically. So I think, yeah, maybe that's kind of the reason why, you know, why the UK is weaker. You know, maybe there's just like more leverage to be unwound.
I think, yeah, I think there is. I mean, yeah, the US is definitely the strongest market. I mean,
yeah,
obviously having the dollar, 87% of the world trade is done in dollars. There's this rush of, they're seen as the safest money, and hence, you know, look at the dollar price, you know, the Dixie chart, you know, it's just straight up, and that just shows people see that as the strongest, and that's where all the money's flowing. You know, and at the expense of everyone else's currency and bond markets as well.
Dollar milkshake.
Yeah, exactly. And it's one of those when something's going parabolic like that, you think it's only a matter of time until it stops, which it is. But I mean, for now, it's you know, it's I'll just share my screen quickly. We'll just hit the dollar. Let's have a look. It's still, I think it's holding, is it the eight week? I think it is. Let's have a look. Yeah, there you go. So again, it's just hugging that 8 week. Something, I guess it's inverse to the pound. The pound was doing the same in the other direction. It's just hugging this 8 week EMA. You know, I mean, if I zoom right out, you can see I'm just looking at this sort of, you know, these kind of parallel channels, bit of a Gareth Soloway parallel channel. But when you zoom right in, you know, really the first thing that I'm looking to break is this 8 week EMA. Which, you know, we've toyed with it a few times, but we've not fully broken it, and then retested it as resistance and then crumble. But you would think until the macro clears up, you know, there's a case that this carries on for a bit.
Well, it looks pretty good, doesn't it? Have you tried it on linear as well? See how it looks on linear.
It doesn't actually look too different. I guess, yeah, probably keeping it on linear makes sense. I like for crypto, I like using log.
Yeah, that's what I found recently. Like for long-term crypto trends, then definitely, well, you have to use log. But yeah, I've been using linear more on like the stock market, currencies, that kind of thing.
Yeah, it makes sense.
How does that channel line? If you move that channel now, how does it?
Yeah, I mean, it's definitely slightly different, but I'll have to reset it. But
yeah,
it's probably, I guess you could argue it's hitting the top of the channel if you do it like that. Or there or there.
Looks like it's broken out. If you pull that down, if you connect the lows, looks like.
Oh yeah, if you connect the lows, well, it's a bit rough and ready, but yeah.
Yeah.
Again, this is why, I mean, more than those kind of trend lines, I just really like the moving averages. I mean, I know that the lagging and all of that, fair enough, but it's a way that you know, I'm trying to see the inverse here. I mean, it was like this. So when it was initially lost, it regained it, then it lost it, and then it sort of tested it as support, and then went on its merry way, a little fake out, tested support, and gone. You know, in the inverse, you expect it eventually at some point it will lose the moving average. Retest it, and then that's your point of sort of, you've got the signal because it's lost it, and your point of entry is where it retests it as resistance. And then that's obviously a big signal for risk on for all the markets really.
Yeah, exactly.
But I guess at the minute this is just you know, the macro is dominating this trade, and it's,
yeah.
You know, until it breaks, you know, we've got to keep going on this merry way for the dollar. Really.
Yeah, it looks like it. I think the next big level's the 2000s? Is it 2000 and the last major kind of
that one there, isn't it? Yeah, so that was like the .com era, wasn't it?
Yeah, 120. There we go. So that's kind of the big level now, really, isn't it?
Yeah, in terms of like support resistance, absolutely, yeah. It's kind of in sight now, isn't it, really?
Yeah, it's definitely in sight.
I mean, this has been the best trade I've done all year, is just selling into dollars, you know.
Yeah.
Sort of in here, I think.
Yeah.
You know, that, I mean, Jesus Christ, yeah, it's up from the lows, it's, you know, so whatever that is, 20%.
Yeah.
Over 20%, it's mental.
Yeah. Yeah, it's been a learning curve this year.
Yeah, I think so. I mean, it's fascinating, isn't it? So much to learn, especially again for new people. I think this is the point. Like, I want this channel and my Twitter to primarily be around crypto. I do think, you know, like most of you, you know, with the adoption it's getting the Metcalfe's law, you know, it's so attractive from an investment point of view. But I think, you know, we all understand how, you know, especially as it gets bigger, it gets more and more underpinned by the macro environment. You know, because people have portfolios that have stocks, so they've got crypto, they've got gold, they've got whatever, and essentially they're all linked. All the assets are linked because, you know, when you need to sell something, you sell all of what you've got. You sell your crypto, sell your dollars, sell your stocks. You know, and we all know there's a strong correlation with the stocks and crypto. I mean, eventually maybe that decouples, but you know, for the minute, it seems very correlated still. So I think we have to be serious, and hey, even if you're a big diehard crypto person, you've got to pay attention to the external other markets and the macro.
Yeah, exactly. Yeah. I mean, I see it kind of more as like growth, you know, like growth stocks, tech stocks. I know there's the whole kind of digital gold, and, you know, I guess it does have that elements of precious metals, like the kind of the hardness of it, you know, and the sound money kind of aspect to it, especially with like Bitcoin. But there's also like the technological side, you know, like we're talking about Quant and XRP, like these kind of, they're kind of like the Amazons and the Googles of the 90s, really. These kind of revolutionary technologies.
Yeah.
You know, I'm not saying necessarily that those two have to be Amazon and Google, but you know what I'm saying? Mm. So you kind of, yeah, it's kind of like, are they going to behave more as growth stocks? You know, tech stocks, or are they going to behave more as, you know, a hedge against fiat debasement, or are they going to do something different?
I think Bitcoin is definitely a hedge against fiat debasement. I mean, it got mistermed, I think, and this year's proved it, that it's not a hedge against inflation. It's a hedge against monetary inflation, not sort of price inflation. And that's the big distinction I think most people get wrong. You know, it is definitely, I mean, look at the blooming M2 correlation chart with, you know, with Bitcoin. I'll just get it back up again. I mean, clearly it's a hedge against the money supply. You know, when the money supply is shrinking, you know, Bitcoin's going to shrink. And when, you know, when the money printer goes bruh, you know, Bitcoin does really well. Mm-hmm. You know, so absolutely, I think that's definitely what Bitcoin is.
Yeah, I think that's because it's been mainly like a speculative tool.
And it's a speculative tool, but that is its kind of utility. It's kind of like a check on the central banks, isn't it? It's kind of saying, you central bankers, you can play your game, but this is our game, and this is how we're going to sort of hedge against that.
Yeah, I think that's the value proposition of Bitcoin, definitely.
I think you're right. The other alts definitely are different, aren't they? You know, with you've got different utilities, I guess.
I see them more as technologies.
Yeah.
You know, they're more like tech stocks.
Yeah.
But yeah, they're also correlated to each other at the moment, Bitcoin and the alts. I think it's just such a young market that it's mainly driven by speculation at the moment. Because even if Bitcoin is hard money and they're only 21 million and all that, it's still only got value if people decide it's got value. You know, just because they're only 21 million of something doesn't mean they're valuable. Still has to have the demand, and people are still speculating on that demand, because that kind of large scale demand isn't there yet. You know, where like every investment firm has got Bitcoin on the balance sheet, and you know, all these kind of failing economies are like moving over into Bitcoin. It's like, yeah, we've seen one with El Salvador, we've seen a few like Michael Saylors and stuff like that, but for the most part, Bitcoin has not got that demand yet, and therefore it's still a speculative tool. And it's got a huge amount of potential, obviously. It's got a lot going for it, but
I guess the market cap reflects that as well. You know, compared to other markets, it's tiny still, you know.
Yeah, exactly. That's it. It's so young, isn't it? The market's so young that, yeah, I mean, that's why it's such a good opportunity.
It's one of those, the bigger it gets, and it's like anything, the bigger it gets, the more it has a gravity of its own, and it pulls more money in, you know. For maybe, you know, the institutions and the rest of it, and I guess regulation plays a part and all of that as well. Like, yeah, there's a lot to think about. I
think Bitcoin's kind of why I'm mainly focusing on Bitcoin at the moment. I think that's quite a big play, because, you know, all this stuff with BlackRock and, you know, like the ETFs, and, you know, it's becoming way more mature in that sense. And, you know, it's got the green light from the SEC.
I think also, just from like a crypto cycle perspective, I think it's definitely the best way to play it, you know, in the guts of the bear market like we are now. I think, you know, it's a much lower risk having Bitcoin. Yes, your upside is capped compared to the alts, but I mean, they can go down far more if everything rolls over. So
yeah,
I think until you've sort of confirmed that you've got that bullish momentum, that's when you can sort of go into your best alts, really, you know. Unless they're clearly outperforming Bitcoin, like, you know, BNB, to be fair, is, and you know, Quantas and a few of them, you know, you can always think of that as well. But I think on the whole, you know, it's just a fairly low risk strategy doing that. And you can all, the time to YOLO in on your favorite altcoins is when Bitcoin's flying up, you know, 40, 50, 60K. When it's doing that, you know, that's when the alts will be really flying. Do you know what I mean?
Yeah.
You know, a bit like sort of June 2020, July 2020, you know, when Bitcoin recovered, got above the 21-week moving average. That was the signal to me to then think, right, this is the time to get diversifying out into some alts. You know, because the risk is now lower because we're above the key moving averages. We've got some momentum, and, you know, when the bull market is officially here, then you know, that's the time to go into your alts for me.
Yeah, absolutely.
But you know, absolutely, you can also play them from a value perspective. You can try and, you know, nibble when they're low as well. Absolutely, you can do that. I just think you have to understand that, you know, that they can go a lot lower than you think.
Yeah.
But also, if you can get it right, you know, that's obviously the point where you're going to make maximum returns. But, you know,
of course,
just depends what your strategy is, really.
Yeah, that's it. I think with all these things, you know, just kind of going a bit of both is the way. Like, don't go 100% Bitcoin, you know, have some alts as well.
Yeah.
Like, you know, I'm looking to pick up some alts at some point. Once I've got a little bit more Bitcoin, this bear market, start having a look at some alts that, you know, if you pick ones with, well, there's that whole debate about, you know, the fundamentals and, you know, how much does that matter in the near term. So if you're picking up alts with great fundamentals in the bear market, doesn't necessarily mean they're going to perform that well in the next bull cycle. You know, I think it probably increases the chance that they don't go to zero, if you know what I mean.
I think like any of these cryptos, it is as simple as Metcalfe's law, as well as the volume going through the network. And, you know, when people talk about narratives, that is essentially just talking about the Metcalfe's law, the network effect. You know, those alts that have the narrative will have increasing number of active users, have increasing volumes going through the network, and obviously then the price of the token goes up.
Yeah.
So I think they're definitely things to look at. I mean, I've made that mistake in the last cycle. That certainly hurt some of my gains. Not accepting that fact enough is that some of those there's some of the alts that have done well in previous cycles doesn't mean they're going to do well in the next cycle.
No.
You know, you got to keep an eye on that Metcalfe's law. Look at the ones that have got the narrative, they've got the growing on-chain number of active users and all of those kind of metrics, and the volume going through the network's increasing. Then then you find yourself a decent alt.
Yeah, exactly. Yeah, it's just knowing what to look out for now, I guess. You know, because it's so early. You know, it's so early for the narratives. The narratives haven't even necessarily been born yet.
Yeah, I totally agree. I think obviously the big gainers, I mean, if you look at some of those big gainers in the last cycle, all your layer ones and, you know, Axie and Sand and, you know, some of those NFT projects and the gaming projects and all of those, you know, they came out in sort of, you know, you didn't really hear about them until well into 2020, probably more like 2021.
Yeah.
Yeah, Axie really did peak heavily in November. So, you know, you're not going to know about them necessarily until the next cycle sort of underway. Yeah. Which again sort of underpins, that's why I like to play it with the lower risk alts and you know Bitcoin. Yeah. Until those narratives are established, then you can ride the wave when they have.
Yeah, exactly. Yeah, I think that's wise. Yeah. Yeah.
But obviously, you know, everyone's got to build their own strategy, and there's no one way of doing it. It's all about your risk tolerance and how much risk, you know, you're prepared to take, and, you know, how much research you've done. Some people, you know, might have got onto those projects very, very early, like Decentraland, Mana, you know, that was out in 2018, I think.
Was it?
I think my brother owned some. Yeah, he owned some way back in the day.
2018?
Yeah, or 2019. Yeah, he had some because he saw the concept and he thought this is interesting, and he got some. You know, so if you can get deep into the fundamentals, obviously, then, or certainly follow people on Twitter that get into the weeds, then that's also good. Yeah. Depends what you're trying to do. Depends what your strategy is, really.
Yeah, I mean, it certainly can't hurt to start researching alt projects now. You know, it's just there's so many of them, and you know, it's kind of trying to find a needle in a haystack sometimes. You know,
I think this is one of the to make it easier. This is why I like Twitter for this, and this is again one of the reasons I'm doing this, not just to give back, is to you know, to form a network of other people, because, you know, Metcalfe's law applies to crypto, but it also applies to us as humans as well. Like, the bigger your network, you know, the bigger your chance that you're going to find some of these opportunities, not just in crypto, just in life in general, really. Yeah. You know, I think that's one of the that's, you know, people bash on Twitter and it can be annoying at times, and the bots and the idiots and stuff, but ultimately it's such an amazing tool. Yeah. You know, to gain information, and, you know,
oh yeah,
it's incredible.
It's great. Yeah, I mean, I get all my news from Twitter these days. You know, just go on Twitter, see what people are saying.
Yeah, you follow people you trust. You know, you're hearing it from the horse's mouth, and, you know, in those cases.
Exactly. Yeah, that's it. I mean, you do have to. There's a lot of opinions. You know, there's a lot of people saying a lot of things on Twitter. You do have to filter out a lot. You know, but yeah, once you find those people you trust.
And it's as quiet now as it ever will be, as we know when the bull market comes around again, it'll be, you know, it'll be crazy. And, you know, yeah, it's just going to be a funny journey. I'm excited to, you know, to go on it sort of public facing now. And, you know, when that bull market heats up, and it will come again, even if it's not next year or the year after, God knows when it's going to come. You know, at some point, you know, we'll get there, and Twitter gets very exciting and very interesting.
Yeah.
But I think for those who are stuck around now, I think they're the people who are going to get really rewarded. It certainly was the case in the last cycle, and that's how I did well out of it, was sticking through these kind of times when it's right at the guts. And, you know, there's people still there, you know, bashing the work out and working hard and keeping focused, and they're the ones who are going to do really well.
Yeah, exactly.
You know, you just got to keep sight of that, really. That's the light at the end of the tunnel.
Yeah, definitely. Yeah, it's going to be a long road.
Yeah, it's worth it though. It really is worth it. You know, it's amazing space, and yeah, excited to keep going on the journey. And I'm sure we'll do loads more of these podcasts as well.
Yeah, definitely. I mean, these are really useful for me, you know, to learn as well.
Yeah, me too, mate. It's good to get the different perspective, and you know, we tend to do these probably once a month, don't we? We certainly have chats. We'll probably record those going forward.
Yeah, sounds good.
You know, and give all the followers and listeners, you know, they can check out what we're thinking.
Yeah, we'll probably have even more to talk about next time as well. In terms of add some action.
Yeah.
You know, I mean, at the moment, there's very little well, in crypto, there's very little action really.
Yeah.
You know, we're just basically waiting for the judge's verdict, aren't we?
Yeah.
So we're either going to pop to the upside or we're going to break down, and it's going to happen sooner rather than later, I think.
It'd be funny if we were still sideways by then. I mean, we could well.
Yeah, we could be.
200 days of sideways.
I think it was Pantoshi was saying that, wasn't it?
Yeah, death by well, they call it time capitulation, don't they?
Yeah. I mean, I guess that's the third option, isn't it?
Yeah, time capitulation. The price stays in the range, but people capitulate from the boredom.
Yeah.
So yeah, something we need to think about as well. But what was I going to say? You need to shout out where people can follow you on Twitter. You need to shout out to people where they can follow you on Twitter, because I didn't mention that on mine.
So it's Amphipod. So like the sea creature. So AMPHIPOD. And then I believe it's, let me just check, _crypto. Yeah.
Nice. I'll put a link on when I post it as well.
Yeah. Cheers, mate. Yeah, I put out the odd tweet here and there, you know, the odd little thought about the markets. So yeah, it'd be good to come and give me a follow. Yeah,
likewise. And I think if you don't follow me already, get on Cassini Capital 1.
Yeah, 100%.
Again, I'll put that in the link as well, and we'll post it later today. But I think from my side, I've pretty much covered everything I wanted to there. Have you got any sort of closing thoughts or?
Not so much really about the markets. I mean, like I say, I think we're just waiting, and you know, I know you're back to work now, aren't you? You're kind of
doing a bit of work on the side. Got a few businesses going on the side, which again, like Raoul Pal said, in a recession, having other forms of income is key, because it's just all about trying to build your cash position, I think, at the minute.
Absolutely. That's what exactly I was going to say. I mean, keeping our heads down, working, bringing in some money. And we just got to wait really for some kind of trigger, some kind of confirmation.
Absolutely. I guess on that sort of topic as well, that's the other thing the last thing I'll say is I'm just about to release a newsletter. So to the people who follow me, I'm basically going to give 50 subscriptions away for lifetime free, basically, just to reward some of the people who followed me. And then I'll charge a very small fee for the rest of the people, and going to sort of have an affiliation network there that people can sort of make money while they share the word. And there's also a group in the works as well, sort of like a mastermind group that we're thinking of doing, just for people who want to go into to catch our sort of opinions in a bit more detail, on a 24/7 basis, not just on maybe like a once a month basis. So it's a couple of exciting things in the pipeline that we're going to be dropping on my channel as well. So yeah, everyone's going to have to keep an eye out for that. And if you want any more information, get in touch. Drop us a message.
Sounds good. I'm looking forward to seeing that.
Yeah, but no doubt you'll be there as well. So
yeah,
lots of exciting things and stuff to keep us going in the bear market anyway.
Yeah, definitely. Yeah, I think you're right. Just got to stay focused, even when, it's almost a little bit boring. I think it's, at the moment with the price action in crypto, well, in Bitcoin anyway.
Yeah,
but it's easy to switch off. I mean, I've noticed myself, like, recently getting pulled by other things, and I had the same thing kind of earlier in 2022 when, I was still kind of bullish, but price was going down. So I was like, okay, there's not really anything for me to do here. I'm just going to hold. And I started getting kind of pulled away by other things.
It's such a good point. It's so important.
That can cost you a lot of money, like if you get distracted now, that could cost you, because your decision making is not going to be as good.
No.
If you kind of, your mind's elsewhere, and
your mindset's just not there, is it?
Exactly. Yeah. So you got to be even more focused, I think, in these quiet periods, really, because you've got to kind of plan your action, and so
I think you've absolutely nailed that. I definitely want to finish on that as a closing point. This is a mistake I made in 2019. Again, I could have done even better if I was even more focused. I've made sure this time I've accelerated my focus as we've got lower and lower, really, because exactly what you say, that and that's also the inspiration for doing the Twitter, this podcast I'm going to be doing, the newsletter, and the group I'm going to, the membership group is all about that. Is that it's very easy to, people want to listen in the bull market, which is just the nature of the beast, but ultimately the winners are really made down in the guts down here.
They've already initiated their attack, so to speak, long ago, and they're just that's if you're going to switch off, that's probably the time that you can take some time away. Yeah,
when you've taken your profits and you're sitting on loads of cash, and you're in early, and you've already sold most of your position, then but absolutely, I think now's the time to accelerate. So we're going to be doing loads more of these kind of things, and hopefully going to connect with more like-minded people, and they can join us on the journey, and we're going to win together.
Sounds good.
Nice one. Well, thanks so much, and
it's been a pleasure.
Do it again, mate.
Yeah, for sure, mate. It's been good to chat, and let's do what we said. Let's keep focused, and it's all to play for.
Awesome.
Yeah.
Thanks, mate. Speak soon.
Take care.
Cheers, buddy.